In this section of the course, we're going to discuss Climax Tops and all of the individual characteristics a stock might display when it's undergoing a climax run. But before we dive into the nitty-gritty and look at some examples, let's just discuss exactly what a climax top is very generally. So just like swing and day traders have various methods and techniques for selling a stock while it's on the rise as close to the end of their specific time frames as possible, spotting a stock amidst a climax run is a technique that position traders can use to assist them in proactively unloading a position at the very end of its move. In many cases, forever, if not for many years to come. Now, not all leading stocks top like this, but enough of them do that it's well worth your time to learn and understand how to catch a stock in the middle of a climax run while it's actually happening. Now, keep in mind, selling stocks is tricky business in general, so selling a stock proactively into strength is even trickier business, even for the most savvy and experienced traders out there. So that being said, let's go ahead and take a look at some examples to help solidify the overall concept. So we're going to begin our discussion of Climax Tops with Amazon's daily chart. This covers the same time period that we looked at on Amazon's weekly chart when we were going over late stage base failures and how to count base stages. Remember, I had mentioned weekly chart is the way to go to count base stages, and you can see why here. Not only do you have a problem with scaling on an arithmetic chart, which is what this daily chart is, and why you will, whether we actually get wide and loose or not, recent action is always going to look more wide and loose than action in the past because it's arithmetic and it can't be compared like it can on a log chart. So that being said, you'll see that's why we started with stage 3 here. You can't even see stages 1 and 2 for the most part. It's worthless. That's why we use the weekly. And there's quite a bit going on with the Amazon. In any event, what we're trying to show here is the larger overall move. Reason being, for a climax top to fit the definition, it has to come on the heels of an already significant move. You're not going to see, you might see climax action occur out of an early stage base, but that would not qualify as a climax top. If you were to show it to Bill, he would just tell you it's too early in the move. That's not a climax top. Now, whether the stock topped from there or not makes no difference. It just simply doesn't fit the definition or what he qualifies as your proper or classical climax top or climax move after a stock's already had a huge run. Bearing that in mind, let's go ahead and jump into Amazon's chart here. And I'd point out stage 3, as we discussed, is the beginning of where late stage begins. So in this case, you're definitely keeping in mind that this is the beginning of where later stage and less probability of working begins. However, we get massive volume on the breakout. The stock moves from the mid-teens to almost 50 in a short period of time. We can also see here, these are probably the biggest point gains the stock has had up until this point, and I would imagine you've got your largest weekly move. Now, whether that qualifies as a climax top or not, that is certainly climax action, and you can see it leads to what I would actually call a 4th stage base. It's just barely long enough before it ultimately fails, which isn't surprising after a climax type action, a later stage base. Now, what catches my eye is that we undercut what I would call a proper base in terms of length here. So technically, we've got a stage 1 base that we're breaking out of here, but because we're trying to make the point of the overall larger picture and the more outstanding climax move in this area here, we're showing it built all the way back on its 1st and 2nd stage base, which we covered on its weekly chart just prior. So whether we call this a 4th stage or 1st stage, technically I would call this a 1st stage base. Since we've undercut the lows here, that resets the 4th stage that we were working on. Not to mention we get super constructive in here in the volume that accompanies the breakout can't be ignored. Even if you're calling this a fourth stage base, the stock's got to be bought. It's liquid enough and risk can be managed easily here. So keeping that in mind, we never so much as touch the stock's 21-day moving average. We get another brief consolidation after a sharp move higher in a very short period of time. And now you can see the stock just goes on an explosive, nearly vertical run. It's experiencing massive demand, which is why we're seeing these exhaustion gaps along the way. Now you're seeing this vertical action on the heels of a move that's already big, which, came fairly quickly after a large move just prior. So again, even if you had missed this entire run and never bought Amazon till here, even if you paid through $49, almost $50 for the stock out of this breakout, in a very short amount of time, you're running from $50 to almost $200. That's an enormous move in an extremely short period of time. This is the stock's daily chart. Remember, it basically respects its 10-day moving average, except for a little shake below here throughout the length of this entire move. So when you're seeing this almost vertical action, clearly the biggest price one-day gains that you've seen from the beginning of time. When we were looking back on the weekly chart, the largest weekly gain also accompanied its largest one-day price move. So you've got all of these indications that a climax run or a climax top may be happening here, not to mention that we back off of 200 and close almost back at 160. If you didn't sell into this move through 200, now keep in mind these are post-split prices, and I want to mention, let's over here, remember when we discussed characteristics of a climax top, excessive stock splits can be a signal that a climax top may be in the works. And again, that refers to frequency of splits, and there were plenty here through 98 and 99, as well as high split factors, which in one case here, 99, we did a 3-for-1 rather than a 2-for-1. So you've got all of those things screaming at you at this point, and you're lucky enough in this bull market, we're lucky enough that even if you didn't sell proactively into this last streak to all-time highs here, you've got a couple of days where to recognize what's going on and get out of the way. And even if you aren't a proactive seller, even if you do own it from $40 or $50 range and you don't sell it until it starts really cracking below its 10-day moving average in here, you've still made yourself plenty of money using all of the tools at your fingertips. And again, let's just point out here, after the climax top, we get a very late stage, super deep, wide and loose, improper base. We've got a breakout. Again, it's hard to compare wide and loose anything here to much further back than here. We start the scale starts to affect it, and it's not a fair comparison. So anyway, late stage, super deep late stage breakout that ultimately fails on the heels of a climax top. So that's how those two go together and why we've included these two topics together in the course. Let's go ahead and take a look at our next example. GSX is the next example we're going to take a look at here on its daily chart. We're going to keep this one simple and easy. There's not much to discuss here. We've got stage 1, stage 2, and stage 3 bases. We're going to start here where we're breaking out of our stage 3 base, which, as we've discussed prior, is starting to get a little bit on the late side. After the breakout, we hold tight, consolidate, quick shakeout below its 10-day moving average for a quick recovery, at which point you'll see here I've got marked a late add-on consolidation. We call it 3B. It's the beginning of what might have been a fourth stage base, but we tighten up and break out here again on big volume. And as you can see here, we go completely vertical. We have the single one-day largest point gain of the entire move. This corresponded with the largest weekly move of its gain, as we discussed here when we were looking at its weekly chart. So those are both indications that you're looking at a climax move. So we can see the move coming out of this late stage consolidation is extremely powerful. By the time we explode out of here, not only does it look vertical and climaxy, it meets both of those definitions of climax move. It comes late or later stage, or late, much later in its advance. Even if we don't start counting from back here, granted GSX has never split, so the soonest I would, 1390, the teens is the lowest I'd typically start buying something. But even if you had waited to buy this stock until 46.40 in just a few months, it goes from 46 to almost 142 in just a few months. So again, you can make a ton of money even starting late, and being aware of these rules is going to keep you out of a lot of trouble and give you a chance to do some selling proactively before something like this happens. That's when you start using your 10-day moving average, which isn't the end of the world unless you have your average coming out of this place. But again, this is a late stage add-on, and if you were adding stock here, it should be smaller. And if you were watching its 10-day, even its 21-day moving average, you'd be lucky enough to get out even or with a little bit profits, which isn't bad after a big climax move and yank back like this, which you see ultimately shakes out below its 50-day moving average. It attempts to build another base here, but you can see it's wide, it's deep, and it ultimately fails, gaps down, and falls apart. So on to our next example. So for our next example, we're looking at Qualcomm on its daily chart. Starting here, we're going to start with our stage 1 base. You can see we break out, move higher. Again, we've got a stage 2 base breakout, which ultimately fails, retests. So we've got a bit of a base on base on base structure coming here. Nevertheless, we're moving a little bit, reconsolidating. Finally, we gap up, we go on a massive move, and we build this consolidation here, which is a later stage 4 base. And regardless of how we count these bases, at this point we've gone from roughly $30 to $100. The stock has tripled at this point. So whether you want to call this stage 1 an entire stage 2 and this is stage 3, which is the beginning of the later stage, it doesn't really matter, as long as you realize that once you're at stage 3 and especially stage 4, things start to really lean against you in terms of risk reward. So again, we've got a late stage base breakout here, a powerful move higher. We've got a big exhaustion gap, which accompanies its single largest one-day gain of the entire move, which also accompanied its widest weekly spread there, as we looked at on its weekly chart. Take a look here, see Qualcomm's weekly. Widest weekly spread of the entire run, accompanying that big exhaustion gap and single largest one-day gain of the entire move. And you can see ultimately the stock breaks down, attempts to form a stage 5 base, which ultimately fails and breaks below its moving averages. So again, you can see the advantages of being able to spot an exhaustion type move or a big climax top happening as it's happening, and being able to take profits proactively, even if you were to wait for it to hit 200 on this day, and realize that not only have all of these things ticked off the boxes in the characteristics of Climax Tops, we've also got massive stock splits going on here. 2 in 1999, one of them being excessive, 4-for-1, which is considered a high split factor relative to 2-to-1. So again, even if it took you until this shooting pattern, or let's leave it there, even if it took you until this all-time high and close back at lows, which is screaming distribution after a big exhaustive climax move higher, you're still getting out in plenty of time, rather than waiting for the stock to ultimately break down and start falling apart below its moving averages. And for our final example, we're going to look at Charles Schwab on its daily chart back in the late 90s. We can see we've got two clean breakouts from early stage bases, which run up, and eventually a third consolidation forms, again labeled consolidation, not base, because we never get a proper base to form in between here and here, but it's more of a sideways move than anything. So again, we're trying to get the overall picture. So we're now approaching a later stage in its move, which, as we've discussed, entails higher risk. You know, that risk reward really starts leaning out of your favor, especially when you get to stage 4 base. So Schwab ultimately breaks out of a third stage consolidation. It continues moving higher along its shorter term 10 and 21 day moving averages until we get to this point here, where we clearly gap and explode higher in almost vertical fashion. We've got exhaustion gaps along the way. We've got our single daily price gain. We do not get our biggest, widest weekly spread here, so we're not going to go back and look at that, but I think this is plenty enough to clue us in that we've got a potential climax top in the works. Not to mention we've got excessive splits. All of that taken into account, not to mention the stock broke out from a post-split price of 14 and ran up to 77.50 in a fairly short period of time, which is a huge move. Again, even if you had started buying the stock at the second or third stage of its move, you made a ton of money even if you waited for it to break its 10-day moving average. Again, though, being aware of what a climax top looks like and being able to sell proactively into this, you can see, will really save you a ton of money even in just that first couple of days off the top. And so, not surprisingly, we see this late stage base on the heels of this climax move ultimately fail and break down.